Welcome back. We are now hearing JP Morgan weighing in on MicroStrategy not making it into the S&P 500, saying it's a blow to crypto treasuries. What part of the cycle is this? I'm not really sure, but we're going to be discussing that. What part of the cycle is this? Albania puts an AI-created minister in charge of public procurement, essentially a public AI minister of finance for Albania. What in the AI is going on here? There is a lot going on in the markets. There is a lot of speculation. There's a lot of all-time record highs across the board, a lot of IPOs, a lot of new kind of companies, and a lot of shilling going on. But as you guys know, in my view, we are at the end stages of the bull market. I'm not saying permanently, but till we go through a corrective phase, which could bring prices down 50, 60, all the way down to 90%. And there's a lot of people who think Cryptoviser, this is not going to happen. This is the most bullish we've ever been. Well, as Warren Buffett says, when others are bullish, you are bearish, right? When others are fearful, you're greedy. When they're greedy, you're fearful, right? And so you kind of have to be opposite what the sentiment is in the market. But we're going to be discussing all of this in today's video because there's a lot of indicators here, a lot of indicators that are mimicking the previous cycle and the sentiment that we saw in the previous cycle. So let's get right into today's video. As you guys know, this is the Cryptoviser podcast. We talk about everything crypto, blockchain, investing every single day of the year. Sometimes we do deep dives into individual cryptos or projects or stocks. Sometimes we talk about the macro environment like what we're doing today. So give the video a thumbs up, hit the subscribe button. Let's get right into it. So a digital assistant that helps people navigate government services online has become the first virtually created AI cabinet member and put in charge of the public procurement in an attempt to cut down on corruption, according to the Albanian Prime Minister. Okay, I mean, I don't think most people thought that we're going to have government officials that are created utilizing AI, but we're already there. Very, very rapidly. This whole AI thing is getting into the mainstream. So we have to really keep our eye on this because a lot of companies are trying to figure out how to make money. And are they going to make money? I mean, as you guys know, we're going to talk about this in a few seconds here with Bitfarms. But my view is not the specific companies that are AI companies like Oracle and stuff like that, but it's the infrastructure plays, right? OpenAI, XAI, Google AI, these are the large language models or the technology, the software. But the hardware is what has to run all of this. And that, in my view, is where the money's at. This user on X, Gary Marcus, with 192,000 followers, said, "Mark my words, this week marks the peak bubble. Oracle just went up $300 billion on what appears to be a non-binding deal with OpenAI. OpenAI doesn't have $300 billion. They don't have anywhere near $300 billion. By their own projections, they won't turn a profit until 2030. Still 5 years away, maybe 4 years away. But all this from a company, all this from a company thought or claimed that GPT-5 was going to be a tantamount to AGI. But the spoiler was it wasn't. For good measure, Oracle doesn't have the chips they need to fulfill the contracts or even the cash to buy them. He says, I'll be astounded if Oracle meets their projections. Now, he further goes on to say, for the record, those who did not follow the link that he supplied, literally the first sentence says, I don't know when the Gen AI bubble will end. He said, I'm saying that the $300 billion Oracle bump, right, and we're about to show you that in a second, will stand out as especially a crazy moment in hindsight, and that it's unlikely that OpenAI will actually pay the pledge in full. Now, as you guys can see from the Oracle stock chart, the stock price went up from $225 on September 3rd all the way up to $300, right? And if you look at where it went from April of this year, 122 to 295, it basically doubled the market cap. And so the market cap right now is 850 billion. So that means it was around 420 billion. And so it doubled, right? They added $420 billion to the market cap in just a few months based on a potential OpenAI deal. But again, OpenAI doesn't even make any money yet, so they could raise money. I mean, guys, this happens with like Uber. Uber didn't make money for like 10 years But meanwhile, they magically continue to get billions and billions and billions of dollars of investments. So I'm not saying that it's not going to occur, but I'm saying like keep your eye on where the focus is, because there these deals saying, oh well, we got an AI deal. This is the new. Oh, we're launching a meme coin, or we're launching a celebrity coin, or we're ICOing. It's the new thing, and this typically indicates the irrationality in the market. And typically, when the market is irrational like this, right? We see this with SharpLink, with BitMine Immersion Technologies, with most of the Bitcoin treasury. Go look at MetaPlanet, right? An initial pump, and then you see the liquidity getting drained. Now, in the Bitcoin treasury companies, the actual companies themselves are draining, right? Their own stock by selling shares in the open market. Here, you'll have a lot of insiders selling and taking profits, while the Reddit crowd and the Wall Street Bets crowd say, buy it up, buy it up, buy it up. They're short the stock. And it's like, well, I mean, guys, if you watch my videos, you know where the cycle is, and you understand that these kind of signals in our thesis that this is the end stages of the cycle, this would indicate, yeah, it is end stages of the cycle. What else could indicate that as well? Well, we're now hearing that Winklevoss-founded Gemini crypto exchange has now IPO'd at $28 a share, valuing the company at $3.3 billion. Now, keep in mind, they don't really make that much money right now. They still do make pretty decent revenue, but it's not that much. But I want to go back to when Coinbase IPO'd, because when Coinbase IPO'd, that effectively was the top of the market. Now, a lot of people say, no, Cryptoviser, they IPO'd at the beginning of the year and the top of the market was at the end of the year. But you could also argue that the end of 2021, the parabolic run to the top, that was just the volatility that ended the cycle. Because even if you look at the Bitcoin price on the charts, right, you had a major spike, a MicroStrategy stock as well, major spike at the beginning of the year, even here, or I should say the end of 2024. But it's very similar to what happened in the early 2021. And so we'll see kind of where Gemini goes. I obviously think that Gemini is a good company. I think once you start to see these kind of things, AI bubble, this crypto 18 months past the Bitcoin halving, it's just like it's almost ultimately bound to go down at some point. And so there will be buying opportunities, but I don't know that the top of the market, the all-time record highs across the board, is the time to buy. And what we've been talking about with MicroStrategy, guys, JP Morgan now says that the S&P 500 rejection of strategy is a blow to crypto treasuries. And I would agree. Now, by the way, we're going to get to Bitfarms and some other kind of bubbly stuff in just a few minutes, but I really wanted to focus on this because it still seems like I was listening to some podcast or spaces the other day with MicroStrategy, Maxis, and they were like, it seemed completely oblivious to the fact that like nobody's buying MicroStrategy anymore. Like, yes, institutions are going to buy it, but they're buying it just to get it on their balance sheet. They're not consistently buying. And this idea that the S&P 500 was just going to accept them in now that they met all the criteria, they're completely missing the fact that there's still financial gibberish in pretty much everything that's coming from that company. BitPain wrote in response to this user who said, you actually have zero claim to the Bitcoin as a shareholder in MicroStrategy. He said, and by the way, that is true, and we'll get into that in a second. BitPain said, this is the lowest possible IQ take about MicroStrategy. The truth is the lowest possible IQ take. That's what he's basically stating. He said, if he ever said this out loud and thought I just made a salient point, all you've proven is that you don't have two neurons to rub together. Okay. He said, no, MicroStrategy's Bitcoin isn't yours in the same way that you don't actually own Amazon distribution centers if you own Amazon. But guys, nobody who owns Amazon stock is saying, well, I have one distribution center per share. Nobody's saying that. Y'all in the MicroStrategy ecosystem are saying, oh, well, MicroStrategy has, this many Bitcoin per share. Bitcoin per share is getting accretive. It's accretive dilution because Bitcoin per share is going up. And it's like, the Bitcoin is not even yours. So you claiming Bitcoin per share, in my view, is extremely misleading and purposefully misleading. Because if the Bitcoin is not yours, why are you saying Bitcoin per share? And by the way, Josh Mandel, Josh Mandel was tagged in this tweet from this user who broke it down very clearly. The reality is different. ATMs, which is selling shares on the open market, strip away the very accretion that they were promised. The supposed multiple has become a myth. Instead of delivering amplified upside, shareholders watch gains siphoned away at issuance after issuance. And that's exactly what is going on here. And so now he goes into the accretion or this Bitcoin earnings per share, whatever financial gibberish they're throwing out there. Like to me, it's like the MicroStrategy shareholders. They're either bots and not real. They're paid and don't care, or they literally don't understand what the hell's going on. Because they're like, well, Michael Saylor said this. It's like he could say whatever the hell he wants. It doesn't matter, right? He could say that Bitcoin's going to hit 10 million 10 million a coin. That doesn't mean it is going to happen. They're like, well, he said it, so it has to happen. Like what? All of the buying that's been going on in the last couple of years, they're the most bullish now at all-time record highs, and we barely hit $125,000. Anyway, the term sounds financial, but they're not legally defined in the way that earnings or earnings per share are. Misrepresent earnings and you can face jail. But redefine words like accretion and Bitcoin per share and there's no legal liability. Ownership of the common stock of the corporation does not represent an ownership interest in the Bitcoin held by the company. This is literally in MicroStrategy's own disclosures. Ownership of the common stock, MicroStrategy, does not represent an ownership in the interest of the Bitcoin held by the company. But apparently that's the lowest IQ take that you can say, is that you don't own the Bitcoin per share, which you don't. And if the company did go bankrupt, which it possibly could, you as a shareholder effectively are going to get nothing, right? Last cycle, nobody thought FTX was going to go down. Nobody thought Voyager was going to go down. Nobody thought 3 Hours Capital, Terra Luna, all these companies were going down, right? Nobody thought the Bitcoin mining companies were going to go bankrupt. They did. This is where we are in the cycle. They didn't make it in the S&P 500. They're still saying, well, but Bitcoin per share, this is... Guys, we are at the end of the cycle. In a bull market, in a real bull market, you don't have to convince anybody that you're in a bull market. You don't have to convince anybody not to sell their shares. But that's what we're seeing going on. Don't sell your shares. You're gonna miss out, Cryptoviser. You're gonna miss out. Miss out on what? Right? Miss out on what? Losing money? Because it is going to occur. I don't know when the drawdown is going to begin. I think it's going to be when the market prices in the fact that the Federal Reserve cutting rates doesn't necessarily mean money printing. But we'll see. We will see. But there are winners here. And this is what I keep telling my viewers, right? You don't want to be in these investments that people are like completely cultish in, like, well, but Cryptoviser, Michael Saylor said X, Y, and Z, and strategy has 15 Bitcoin per share. It's accretive dilution. It's like, define accretive dilution in the simplest terms. They can't. They cannot do it. So that's not the time to be in that stock. There is going to be a time to be back in MicroStrategy. There will be. It's not right now. But you want to look for underperformers. And one of the underperformers that we've been talking about for quite a while on this channel has been Bitfarms. And by the way, I'm going to show you this video from an H Rainwright and Company. This is the CEO of Bitfarms, Ben, and he did a presentation there. We're going to listen to this presentation in just a second. But before we go there, I want you guys to see the sentiment is beginning to change. Sentiment is definitely beginning to change. So they talk about the fiber network that these companies are going after, right? All the Bitcoin mining companies. But Bitfarms, there is a low latency, low curtailment, massive fiber optic network, lower cost of power approach that hyperscalers are actually taking these large deals with TeraWulf and NBIS. And the only other asset that looks like this in the Northeast or Mid-Atlantic is the Panther Creek facility from Bitfarms. 400 megawatts and 80 megawatts of backup generation, loads studies done, $250 million low-cost Macquarie credit facility to handle their share of the build. And they haven't used at the market in a very long time. In fact, the CEO, Ben, he's buying stock. They're buying back their stock. And Riot cleanup is here. Basically, Riot is pulling out of Bitfarms because they realize they're not going to be able to acquire Bitfarms. And so them selling their shares says they know Bitfarms is a legit company that's going to continue to grow, because otherwise they would have stayed as a 20% shareholder and tried to continue to acquire the rest of the company, because the assets for Bitfarms are there, right? And so, this map shows TeraWulf's facility in New York and New Jersey. This is the big picture. But Panther Creek is also on this map as well. We also see this other one that says, this is too good. As I predicted, Iris Energy Management sold stock on, I think it's September 11th. Okay, so I'm going to show you the Iris Energy stock first. So what we've been seeing and hearing is bullish. Everything is bullish for Iris Energy, and it has been, right? $5 to $30. That's what? Like a 5-6, about a 5x. In the last 5 or so months, in the last 1 month, we've gone up from about $17 to $34. So basically doubling in price. But again, if we were in all bullish the market, why would we see Iris Energy executives selling? This executive is the co-chief executive officer. He sold 1 million shares for $33, so about $34 million. It says the amount of securities beneficially, okay, so that's how much he owns. And then the other executive, I guess this is the same person. No, these are different people. This is another co-chief executive officer, sold another 1 million shares. This is dated September 11th, 2025. And so this user on X said, this is too good. As I predicted, Iris Management has sold stock, 1 million shares each, and you be buying, they be selling 30 to 40 times EBITDA, and knowing they don't got it will do that to you. Now contrast that with Bitfarms, where the CEO is buying stock. The company isn't using, it's at the market or selling shares in the open market, and they're actually buying back their shares, and it's trading at 4 times EBITDA. So Bitfarms is at 4 times EBITDA. Iris Energy is at 30 to 40 times EBITDA. And people are bearish on Bitfarms, right? And it's not that maybe that they're bearish on Bitfarms, but they're bullish on the stocks that they hold. Guys, this run up is what we've been waiting for. This run up, I think a lot of it has to do with this whole AI craze. But if AI is in a bubble, like this user said at the beginning of the video, well, this could mean that the Bitcoin mining companies that are pivoting to AI and getting a bid on AI, that could mean that they're also potentially in a bubble. And so we have to be really, really cautious here about what we do with these individual assets, right? Whether it's Iris Energy, Marathon Digital, Riot Platforms, or Bitfarms. Now, Bitfarms, I think, as you guys know, I think it's highly undervalued, right? They have a lot more exahash power. They have a lot more AI pivot energy pipeline than most of these Bitcoin mining companies, and most with much higher valuations. I mean, Bitfarms, I think, should be at a $5 billion valuation at a minimum, which is still lower than Marathon Digital, right? Marathon, when I'm recording this right now, is at about 5.8 billion. Bitfarms is at 1.5 billion, but that's in Canadian, so it's about 1.2 billion. So to get to 5 billion is basically about a 4x. A 4x from here would be $8. Is that going to happen? I don't know. I'm just telling you kind of like what I think the company should be valued currently based on the whole landscape of all the Bitcoin mining companies. And a lot of these Bitcoin mining companies are pumping like crazy. I mean, look at Iris Energy, $9 billion. So Iris Energy is now $9 billion, and it's a larger market cap than Marathon, which is the largest Bitcoin mining company in the world and has 50,000 somewhat Bitcoin. I actually didn't even know that until this video, that Iris Energy has a larger market cap than Marathon Digital. You can see Cypher Mining, which I also think has a lower exahash per second rate than Bitfarms. They're at $4 billion. Let's look at TeraWulf that just got a big deal with Google. They're only at $5 billion. So Iris Energy is double what TeraWulf is, and TeraWulf has Google. Google owns 15% of TeraWulf. And the Iris Energy executives are selling their stock. And so when I'm looking at this, right, I mean, think about it. The people who are bullish in the Bitcoin mining space, if they start taking out profits, but they're still bullish on Bitcoin mining and AI pivot companies, they're going to want to go into undervalued assets. And this is why I think that we're starting to begin to see a lot more conversation about bit farms. I'm seeing a lot more price targets as well. Meanwhile, a month ago, everybody was bearish on bit farms. And I kept telling my viewers, guys, their Riot is exiting their position. So there's going to be some downside because they are selling. But we know the company just approved buybacks. The Bitfarms CEO is buying his stock. And this is him in front of bankers and like Wall Street, like decision makers talking about Bitfarms. Let's listen in. And by the way, don't forget to give this video an absolutely free thumbs up and also hit the subscribe button. That way you never miss a new video. Let's listen to Ben, the CEO of Bitfarms.
So what's going to happen here is that you don't actually want to lock yourself into a term sheet with a hyperscaler today. What you want to do is you want to execute. You want to bring that closer and closer and closer to the point where the customers are getting increasingly more desperate and they're willing to pay increasingly higher prices. That's how you lock in higher margins and higher revenues. And so this is exactly aligned with how we view the market. So
it's very interesting what he's saying, right? Don't get locked in with a hyperscaler. Hyperscaler is like, I would imagine, kind of like what we're seeing with some of these other companies getting these deals, right? TerraWolf just signed an 80-year lease contract with Google for these AI data centers, 80 years. And so they're locked in. I think this is what Ben is talking about, right? So, what Bitfarms is doing is creating the infrastructure and then leasing out, right? Again, this is my general take on it, and then leasing out whatever their capabilities are, but not on an 80-year contract, right? A lot of these companies, like Iris Energy, like TerraWolf, like they're getting these big deals and everybody's rushing into the stock. But to what Ben's point is, right? How can you actually make the most possible money if like a Google owns the whole contract for your whole company? You can, right? And so if all the other companies now are making more money because the resources are so limited, which they are, the energy pipeline, the infrastructure, the connectivity for these data centers, it's right now, there's not that much. And so they're all fighting, right? Low supply, high demand. Now, at some point, we'll get to the point where there's more supply than there is demand, or it will grow at the same pace, likely, right? I would imagine. But right now, and probably for the next few years, it's going to be a race to who can get the most infrastructure, right? And while long-term contracts are good, you can't capitalize on the upside if you're locked in. And so that's what it seems like what they're doing. And listen, a lot of people have been critical about Ben. I mean, I haven't been super happy with his leadership over the last year or so in terms of just communicating with the investor base and the ecosystem, really marketing what they're doing, right? Because I think that these other companies, they have a lot of kind of activist investors and stuff like that. So a lot of connections are built that way. Maybe this is why we're seeing some of these companies getting these major moves. And Bitfarms hasn't done that. I don't know exactly why they haven't done that, but I do like Ben as a CEO. I don't think that he is going to want to fail, right? If you get somebody who's an old guy, in their 80s, right? Like we see in a lot of businesses heading it up, they're going to be very, very slow to move and potentially not want to try new things. And I think that I don't see why Ben would not want to succeed in his role, taking over this company, which is probably the most undervalued Bitcoin mining, AI, and HPC play that there is in the market and has been in the market. I think that he wants to get it to a much better place. And the fact that he was able to successfully get Riot platforms to number one not buy the company. Number two, exit their holdings of the company, right? I did think it was kind of good for Riot to own some of their shares to kind of, I think that was kind of a kick in the ass for Bitfarms, to be honest, because I think that Bitfarms, the company, and I don't know if Ben just started then or what, but I think that was like a wake up call for them. Like, you guys need to get shit in gear. Otherwise, one of these other companies, you're going to have no choice but to let them buy you. And I think Ben has done a great job pivoting to the US, pivoting to AI, pivoting to HPC, while also having the Bitcoin mining business. Because as I've explained, since the beginning of actually since the bear market really, is that there are going to be Bitcoin mining companies. And by the way, it may just be Marathon Digital, because I don't think that Marathon Digital has any really did any major AI or HPC pivot until just recently, like in the last few months. And so they spent a lot of time accumulating Bitcoin. They spent a lot of money buying Bitcoin with these convertible bonds instead. And by the way, when they should have been selling because the price was going higher and we're at all-time record highs. But Marathon Digital, instead, they were buying Bitcoin at all-time highs instead of selling at all-time highs. And I said, this is a huge red flag, because this is the exact same thing that we saw in the last cycle. The Bitcoin mining companies that have been selling their Bitcoin during this bull run, these are the ones that are going to be doing well. The ones that have pivoted to AI, they're the ones that are going to be doing well. Because now if we move into a bear market, all Ben has to do is tell the company, shut those mining machines off, convert them to AI and HPC. And now they went from losing money, right, in a downtrending bear market into we're going to make money. And other Bitcoin mining companies are not going to be able to do that. And or they've just signed the contracts today, and by the time they get the infrastructure and everything in play, we're going to be in 2027. Now that's bullish for then, but for the next year and a half, 2 years, what are these companies going to do? And so that's kind of my thesis on Bitfarms. I've traded the stock. I hold the stock. I still think that this company is going to do fairly well. How well? Like I said, I think that it should be about $5 billion at a minimum, based on their current capacity and their current business model, right, that they have. Whether we're going to get there or not, I don't know. But there's definitely a bid up going on in Bitfarms. And I think that this is Wall Street realizing, like, oh, Cryptoviser was correct. Cryptoviser was correct about this this stock. Anyway, let me know what you guys think about Bitfarms. I don't know. I mean, just to give you guys some detail, if you zoom the chart out, I mean, we're still not higher than where we were last year. So we're kind of even. So it looks like the last year was just a complete wash, just a complete waste of time. But this could indicate that they were building. And we know that they were building. We know they were expanding their AI and HPC capabilities. We know that they were focusing on getting, offloading their facilities outside of the US and buying more facilities in the US. But the price kept going down. But now the market is starting to pay attention. Anyway, moving right along into the next topic, which is Open Door and our favorite, Anthony Pompliano. Now, as you guys know, Anthony Pompliano started a company, another Bitcoin treasury company called ProCap. Now, I'm not sure. I think that they bought Bitcoin already at around $110,000, something around there, maybe $105,000, but still over $100,000. Very high buy price. And that worried me, right? And I'm like, why is Pompliano doing this? Like, he's a smart investor. He's a smart guy. Like, why is he not raising the money and waiting till the bear market, waiting till lower prices? Now, granted, the Bitcoin maximalists, they don't think that we're going to go into a bear market at any point. But anyway, Anthony Pompliano posted this. And by the way, this is going to be a Jim Chanos and Anthony Pompliano thread where they're basically arguing whether something's a good investment or not. And we're going to look at the chart, and I'm going to give you guys my thesis on this. Anthony Pompliano said, let me explain something to you about Open, or Open Door naysayers. The company just hired a guy making $1 gazillion at Shopify. They're paying him $1 per year unless he can make Open Door stock appreciate a significant amount. For example, if he gets the stock to $82 a share, he ends up with something like $6 billion personally. What do you think is going to happen? Are you willing to bet this guy can't figure out how to create value for shareholders and himself? Now, again, he's talking specifically to the open door naysayers. I'm going to just give you guys my opinion right off the bat, right? Just because somebody's incentivized to get something done doesn't mean they're going to be able to do it, right? Shopify is a different business than Open Door, a very different business, especially in a very different environment. Open Door, according to their own page here, it says Open Door is an online company that buys and sells residential real estate, headquartered in San Francisco. It makes instant cash offers on homes through an online process, making repairs on the properties it purchases and relisting them for sale. It also provides mobile application-based home buying services along with financing. As of November, okay, so that was November 2021, but either way. Okay, so he needs to get the company essentially to $82, which is basically around 10x where we are, right? Or 10x where we were last week, okay? We're at $5, it doubled just based on them hiring this guy from Shopify, right? But has anything changed in the housing market? No. Has anything changed with interest rates? No, not really. Quarter of a point or a half a percentage point, that's not doing anything. And by the way, that's also not money printing. So if you were not able to afford a $500,000 home last week, you're definitely not going to be able to this week or next month after the Federal Reserve cuts rates again or doesn't cut rates. It doesn't matter. That's not going to materially change the housing market, right? And by the way, if we pull this back to the 5-year, granted, we are at a very, very low prices from the 5-year. But remember, in 2021, the housing market was great, right? Everybody had money. Everybody didn't have to go out and work for a year. They didn't have to spend a lot of money for a year during the pandemic, right? Anyway, so this is what Anthony Pompliano wrote about Open Door. Jim Chanos said, no position here, meaning he doesn't hold any of the stock or short positions on the stock either. He said, but what exactly is the new business model at this point, besides getting the stock to $82 a share? If it's not house flipping as a principle, then what is it? Meme nostalgia? Now, Anthony Pompliano wrote, respect your work over the years. I am long the stock. If you don't believe the future is bright, you should short it. Let the market decide who is right. But look at what Anthony Pompliano is saying. He's like, it's all or nothing. You have to go all or nothing. If you don't think it's going up, you have to short it. It's like, no, you can sit out and still have an opinion, right? Because I don't own Open Door. But I think that my opinion on Open Door is still right? Just because I don't necessarily think that the stock is going to go up 10x in a short period of time. It also doesn't necessarily I don't think that the stock is going to go down, or it's not enough of a bet to put my money on, right? It's the same thing like when people go to Vegas and they see a 000 wheel on the roulette. They're just like, forget it, I'm not playing. Now, granted, it's only 3 spots on the whole wheel. And it does lower your chances to win, but it's just not worth it, right? To some people to make a bet if the return is not slightly larger or the chances of winning are slightly larger, right? But to other people, they don't care. It's not that big of a deal. But to just say short it, no, that's not. It's not the answer to everything. But anyway, Chanos wrote, just curious as to why you're long the stock is at an $8 billion valuation. That's all. Promoting a highly shorted momentum stock to retail is fine, but that's generally not a sustainable long-term business model for the underlying company. And I would agree. Again, where are we in the cycle? Where influencers are promoting stocks just that are because they're highly shorted or because the CEO was hired and, he's incentivized to get the company, like the guy's a billionaire already probably. So he doesn't need another $8 billion. Now, I'm not saying that he's not going to do a good job. I don't know him, but to think that he's just going to get the price up to $82 with no business model is the same thing like Michael Saylor. People saying, well, Michael Saylor said that Bitcoin's going to get to $10 million. It's like, yeah, but Michael Saylor doesn't control the market. Anyway, Pompliano continued. He said, I'm long the stock because I believe it will be worth more in the future than it's valued at today. He believes it, but what data, right? On this channel, we talk about what is, not what if. This sounds like he's talking about what if. He said the company was left for dead but didn't die. This is usually a good sign of resilience. Okay. They will cut costs, headcount, improve the product quickly under the new CEO, benefiting from incoming rate cuts, and hopefully transform the way homes are bought and sold in America. So again, he's making this whole bet based on incoming rate cuts. Now, in my view, I do think that rates are going to be cut at some point in the future by substantial numbers. But when, right? They've been telling us we're going to keep rates higher for longer, and they have. There's no definition to longer just because you feel like we've been too long in these high rates. They're still lower than they were, 50 years ago or 40 years ago, something like that. But you can't invest on hopes. You can't invest on worrying what the Federal Reserve is going to do. That's not a solid investment, right? I just laid out for you Bitfarms and why I think that Bitfarms, along with the other Bitcoin mining companies that have pivoted to AI, are going to continue to do well. They're going to continue to do well because they have actual technology that's being adopted by the likes of Google, right? TerraWolf has a 80-year lease agreement with Google, and Google now owns 15% of the company. For me to think, oh, well, just because Google owns 50% of the company, it's going to do well. I mean, likely it will, but they have a business plan. We know what they're going to be doing. We know there's going to be cash flow. We know there's going to be revenue. Just saying, well, hopefully when the Federal Reserve cuts rates, then they're going to be selling homes all. It's like, no. When they cut rates, you have to wait 6 months till it actually hits, and they actually have to print money so that people can still afford these homes that they're buying, plus the insurance, plus the property taxes, plus all the other utilities that you have buying a home, right? It's not that simple. And so I agree with Jim. And the thing is, the reason I'm agreeing with Jim Chanos so often now is because he is like, the market is in irrational territory, which means we're at the top of the market. And whether he's shorting it or not, it doesn't matter. This is an indicator of where the rest of the market is and what the market is thinking about and how the sentiment is in the market. I mean, look at the stock. I mean, it's cratered. And if you look at the revenue, last year, they lost $392 million. The year before that, they lost $275 million. The year before that, they lost $1.35 billion. And they're not expected to make any money until whenever that other tweet said, right? And so what is the play here? Oh, because there's a new CEO coming in. It's like you're betting the whole business on a person when the environment and the business model that they have is not a sustainable model in this environment. Anyway, you guys kind of get the point. I think you do. And I mean, the same thing could go for Carvana. I mean, look at Carvana over the last 5 years. Similar kind of chart. I mean, obviously we're at the bottom here for Open Door, but it could happen with Carvana. I mean, Carvana is basically doing the same thing Open Door does, just in the car space, right? They buy cars and then they sell them. They, maybe clean them up a little bit and then sell them at a higher price. That's exactly what Open Door's method is right now. But home prices are at all-time record highs still, and barely coming down. So there's a lot to think about here, and there's a lot to kind of take in on the overall market. And meanwhile, Ethereum's DeFi ecosystem continues to decrease. I mean, look at the sharp drop from April, which a lot of people are saying is the top. Let's check the Ethereum Validator Q, validatorq.com. 2.6 million Ether is currently in the queue to exit the staking ecosystem, aka probably be sold. And it's on a 45-day wait list. So you can't get your coins for 45 days, which is a month and a half. A lot is going on, a lot to take in. In my view, I agree. I think that a lot of this is in a bubble. I think that the market moves that we're seeing, AI agents becoming finance ministers for countries, these are all very, very toppish signals. And so the irrationality of the markets moving, this is the banana zone. This is exactly what Raoul Pal's talking about, banana zone. And it's happening in a lot of different cryptos and stocks. Just remember to take profits. See you guys on the next video. Don't forget to give this video a free thumbs up and hit the subscribe button. That way you never miss a new video. Crypto on.